We had another strong close in the markets, leaving us right around that all-time high level in the SPY. And I've got a plan for the week. We've got some Mag 7 names reporting earnings over the next 2 days. We've got the Fed policy update coming today on Wednesday as well. So some catalysts right around all-time highs, not usually the best time to be guessing. So I'm going to show you exactly what structure I am looking to trade off of. Let's just jump right into the charts, guys. A couple points I want to make here. First being the vertical move we're in right up into all-time highs. Okay, we're pretty vertical the last 5 trading days, right up into all-time highs, which is where we have possibly stalled out. Actually, let's take a look here at futures. Futures is making a new all-time highs, which was not a thing a few hours ago when I looked. So that's a decent look. Getting more follow through. I don't hate what I'm seeing out there, guys, but do still be aware of the vertical move that we were in, going right into a flood of major catalysts. What I want to say here is I need confirmation of a move. And we've not even really broken out just yet. We're just right back into the all-time high level. We invalidated the breakdown. I want to talk about that in just a second. But here's what I would love to see. I'm not missing a move. I'm waiting for clarity, directional clarity, knowing there's such meaningful catalysts, right? It's the largest earnings week of the quarter, right at all-time highs, when we don't have big tech and haven't had the Mag 7 helping lead the market higher. We've had rotation. That's a great thing. But we need big tech and financials to be a part of a sustained follow-through move higher in the market. Okay, the rotation we've seen isn't going to hold the market up. So we need a positive reaction out of these Mag 7 earnings coming this week, guys. And if it rips us higher, that's the point I want to make here. I would love to see that. I would love to see it rip higher. I'm still not going to pile into anything. Maybe I'll take some other trade ideas as we do break out in the market, some of the stuff I talk about here today. But what I'm really most looking forward to is a pullback that holds structure after a move higher, okay? A break out of this churn that pulls back and confirms by not making a new lower low, by making a higher low, right? That is confirmation. And why does that matter? Because what if you were an early bird short last week when the market gapped down coming off of tariffs, right? This is the first trading day. Last Monday was a holiday session. And look at what happened to the people that tried to predict the market top. You didn't wait for confirmation. Yes, we put in a new low, right? On the swing low on the daily trend, we did put in a new low and close below. But you didn't allow it to wait for confirmation and you got smoked. Okay? I'm not going to do that to the upside. I'm going to wait for this current move to pull back and hold structure and reinitiate, and I'm going to buy that triple R in the market. I'm going to roll that into my leaders, and I'm going to print some damn money, okay? Because then I'm trading with confirmed momentum of the market behind my positioning. That is what I will wait for. We're going to get some significant clarity coming off of a Fed meeting, Apple, Microsoft, Tesla earnings, SanDisk earnings, Western Digital, memory, right? A major momentum tell right there. If we get a big reaction in memory and continued speculation of that theme continuing higher, right? If there's a memory shortage, right, and they come on and their earnings calls are all about how they can't keep up with the demand, right? Like I expect that stuff to keep doing well if that's what happens. But we got to see. That's a guess. An expectation is a guess in these markets, okay? So I'm going to wait. And I encourage you to do the same, okay? I encourage you, I'm not telling you what to do to trade. This isn't financial advice. I encourage you to, if you're struggling in the markets, to wait for confirmation and stop trying to predict and guess and buying breakouts if it's not working for you. Some people are able to trade breakouts effectively. Personally, I was able to solidify a much higher win rate with tighter stops by waiting for my triple R. Okay, and then I have 5 different models structurally that can present an opportunity, whether that be a shake and go, gap down reversal, a peg play, box breakout, IPO cycle, narrative play, but the triple R is what I wait for because by definition is making me wait for a retracement that holds structure and resumes trend. Retracement, reaction, remount. So that's probably enough of an opening rant here today. I think you guys are starting to get it. A lot of you are coming back. Thank you so much for that. I just hit 500 subscribers. I'm not going to get into this today. I am offering, the website is changing. People are asking me for more features. They're asking to make payments. You're asking for trials, all these things. I've got to pay a developer to make that happen, and it's $99 a month to offer. It's going to cost me $1,200 a year just to give you guys what you're asking for. I'm raising my prices. So anyone who has been here and listening to this, I'm going to stop saying this when the website is updated. I will honor the current price that is at. It's $500. Okay, I'm raising that by 35% to cover my expenses, and I want $500 to work with you one-on-one and teach you what I've learned over 13 years. Hold your hand and care about your success in these markets. Okay, so if you've been here in the first 500 subs, I will always honor that price. Just shoot me an email, warrensnacks@gmail.com. Say as much or as little as you would like to say, but just say something about being a part of the first 500, and I will always honor that price. That can extend forever. All right, we'll have that documented conversation opener, and I'll always honor that price for those of you guys that were here from the jump. So anyways, guys, the RSP is stalling out just a little bit, nothing of concern, right? Just sort of going sideways here. We've got some swing lows we'd love to see hold. This was that gap down last week, right? Immediately invalidated. You know, the hard swing low is this one for me, right? That was just a gap down coming off of freaking tariff tweets again, right? Like nothing really structurally changed here. Let's look at the weekly here. I mean, I'd like to see it hold. All right, I'm not going to beat around the bush. I would. It would be healthier to see this hold. Okay, period. Right. So let's call that the most recent swing low. I'd like to see it hold. And IWM, I don't even think I looked at this yesterday. Look, guys, a pullback in IWM is healthy. Look at the ripper that this thing has been on. So this thing pulling back into structure and making a higher low above this one, which there is a lot of room for that to happen. What I'm looking at is possibly a pullback to the prior breakout level, right? Prior all-time high. So it could even be here. You know, somewhere in there would be very healthy, right? Like let these things reset. Pullbacks are a healthy part of any trend. Do they hold structure? Right? Do they make a higher low, or if we're in a downtrend, a lower high, and then resume trend, which would then be making a new high or a new low if we're in a downtrend, right? Like we need pullbacks to sustain healthy trends, okay? It sets our ground rules, right? It gives us structure to risk off of. Don't be afraid of pullbacks. Pullbacks are money printers for me when they hold structure. And we align them with proper timing in the market and control our risk management, all this stuff. You got to do it all right? You got to do it all. But guys, I just want to jump into some names here. I think I've made enough of a point. You know what I'm looking for, right? I'm waiting for my confirmation. I don't know what the reaction to the Mag 7s are going to be to memory. I don't know if Jerome's going to come out and go torched earth. I don't think he will. He's been very professional his entire tenure, whether you agree with this policy, whatever. I mean, dude, at the end of the day, all the black swan events that we've had, the fact that he's done a good job, okay? It is what it is. Like, okay, you can argue his current policy, but, I mean, look at the market. Look at the market. Like, we had COVID. We've had bombing of Iran's nuclear facility, like a bunch of shit, right? The tariff sell-off, like, and here we are at all-time highs. That doesn't happen without, let's jump into the names, guys. I got APLD. This is more of a, let me make a point here. I was talking about this with you guys in Bootcamp. This will be a little bit repetitive, but I think the point needs to be made here. This is what I want. Like, it's this or nothing. A breakout that pulls back hold structure in triple R's, the next triple R in this breakout, right? I'm not buying the current move, okay? Why is that? Because the same stuff I always say, right? Like, let the move solidify. I don't care if this rips all the way up here, right? It's the next triple R is what is high probability, okay? As long as it holds structure, it doesn't breach this swing low. The next triple R above that is high probability, okay? So that's what I'm waiting for, wherever it may be, okay? I'm very interested in getting involved in APLD, but I'm going to wait for what I just said. And an example of that, don't need to go very far back into the past to find it, is right here. How similar does this look? I mean, I'm talking about this price action right here. It's the same freaking thing, okay? It's the same thing. Hey, sorry, that's a little bit too big. It's the same thing. That is the same price action, okay? And what happened? It broke out, shook people out, but it broke out and then pulled back, held structure, re-triggered, and gave you an entry, a triple R entry right there. So pull back, hold that level, and re-trigger triple R if that's what we get, or maybe it looks like it just runs away for a little while with us, but it will pull back. It will. And that's where you look for it to hold structure. We're going to get another triple R on APLD, all right, and it's going to be attractive. UMAC is one that I want to look at. I think I like this a lot, actually. Yeah, I don't remember what these people do. But anyways, it doesn't matter, okay? Hey, look at this. Well, I'm not doing this on purpose. But look at this structure. How similar does this look to APLD that we were just looking at? You get your flat top breakout, okay? It's rolling everyone. It's rolling the breakout traders. It's rolling the breakout traders. But what do we have here? Structure that if it holds above, which it currently is, and re-triggers through the level back over the 9, like I love this actually. But it's the same thing. It's the same thing. Okay, I am working with probabilities based off of data of seeing this shit over and over and over again for the last 13 years. And it works, okay? It works more often than not when paired with hot sectors, proper timing, all of the things that I say over and over and over again. But guys, I didn't mean for that to happen, okay? I knew I liked it just looking at it, triple R on volume, right? It's changed character, okay? All the stuff, right? We were in a downtrend, we switched to an uptrend, got back above the 50. Oh, triple R right there, that worked. Oh, triple R right there, that worked. And maybe here is another one, but there's bigger structure that I didn't notice the first time I was looking at. Looks very, very similar to what we just were looking at on APLD. So let's keep it moving. I got some fire here today. That just got me excited. It reminded me of a few things that are on the list. GE, okay, this is one of those things, okay, a negative reaction to earnings, but these are opportunities at times, right? Where do they step in? This is obviously over $250 billion, obviously institutional name, hot sector, bad reaction to earnings. Okay, well, where do they step in? Do they defend the level, the recent swing low? Do they get it back over? Like, retail's not moving this name, you guys. Okay, so if you see structure, form, and a resumption of trend, that's Wall Street. Okay, don't you want to trade with their momentum? Don't you want the momentum of the market? So anyways, this is just a simple retracement that happened off of earnings. Well, if we get a reaction above the recent swing low at or around our level and remount our short-term and the mid-term moving average, remount our moving averages, that's triple R trigger, hot sector, hot name, up into the right fundamentals, okay? They just, I don't know, maybe they said something on the call that people didn't like. It doesn't matter, okay? It's an opportunity because it's holding structure so far. If it remounts trend and the market reacts positively to the Mag 7, this stuff remounts. I like this a lot. I do like this a lot. And same exact idea, so I don't want to explain the same thing. Exactly what I just said of GE, same thing here on INTC, on Intel. All right, all this is doing, bad reaction to earnings, it's pulling right back into structure, okay? Prior all-time high level. Does it react? Do they step in? $250 billion company. They is them. Okay. Does the real money hold this up? Does it hold a structure and reinitiate trend? At that point, joining them is putting the momentum of the market behind your back. Make sure SMH looks good. Make sure the market is telling you to buy. Okay. But if all those things happen and this guy re-triggers over the 9, it's a triple R retracement reaction remount with a gap down reversal. Model I don't talk about a whole lot because I don't like to take it in the sort of market that we're in. I want a hot, rippy follow-through market, and gap-down reversals on the leaders are typically good continuation triggers, okay? Maybe we'll talk about that more if it does happen here, but the first trigger here would be a triple R, and then you've got the gap-down reversal trigger above that, possibly stacking those models up. VSCO, still on watch here. This was pretty stretched off of its 50. So seeing it, yes, you can say this was a swing low. We wanted to see it hold. I'm not overly worried because I've been saying for a while, I want to see these things pull back and retest their 50 area. It's been stretched for a while now. We were really starting to get pretty vertical there. So yeah, this is still intact for me. Still the bigger picture idea, the bigger trade idea of an IPO cycle. So next triple R on VSCO is it's on the radar, and that goes for Ross here as well. ROST is the ticker, but it is Ross Stores. You Americans know what I'm talking about. Yeah, let's see. Okay, let's see if we get a reaction at or around our recent swing low, the 50, and a retrigger. Ross is going to be on the radar in that scenario. AMR, the coal sector, current administration Loves coal. We got a retracement. Let's see if we get a reaction and a remount here. You know, this is change character. It's building above. It's confirming that change of character. Like this is something we want to be trading, looking at and considering entries in on triple R's until that changes. Like until the trend breaks, until the follow through and the structure of this chart changes. We are in a clear defined uptrend that we want to be considering triple R's in, okay? Rocket, same thing. But yeah, clean retracement reaction, possibly getting a reaction and a remount here, back over the 9. Same thing, like the current administration likes coal. I like to stay away from the things that the current administration doesn't like. Oh, there's an example that I'll talk about, UNH. Like, I don't love the healthcare sector and haven't for a while. I've said that many times over the months of starting this channel. I don't love the healthcare sector because of the headline risk of the current administration. Look what happened in UNH yesterday. A couple of things I want to talk about here on this one. This is another example. The more important thing, who cares what I think about healthcare and the administration? That's unpredictable. This was predictable. You know why? You never should have been into it, okay? It never confirmed a change of character. It never gave you a long signal the way that I do things, okay? If you're an investor and you believed in this thing and the comeback story, sure, okay. But this never gave a confirmation of a change in character. It didn't happen. It never even got back over. It barely got over its 200. Then you had earnings 4 days later, so you shouldn't have been getting into it then. But what do I say? Let it triple R after the change in character. Let it confirm. It never did that, and it rolled. And all the dudes on Twitter have been saying how this thing is going back to 600. It's free money, and look at us now. Why don't you just learn market structure, breadth, proper risk management, some models that actually have edge, and stop trying to predict bottoms? Because that doesn't work for most people. It's just that simple. And even if you are an investor, or I don't want to say, because investing, that's a different mindset, it's a different skill set, it's different. I'm not talking about investing. Even if you want to make the argument that this is going up to 600, okay, and that's your reason, and you're going to average down in this move, why tie all that capital up in this prediction until you're right, if ever you are? Like, come on, guys. Like, what I'm teaching you is far more effective than trying to guess bottom on things that have clearly broken. This chart is broken, okay? Like, just because you think that, or Twitter thinks that this is going to 600 again, the chart's broken. Read the room. I'll stop. But this was a fantastic example of why I wait for the confirmation after the change in character. Just like I'm waiting in the market, I want the confirmation after we find out the catalyst. Do we get big tech and financials back, and do we think we can trust to move higher? Well, my answer of yes would be it breaking out, pulling back, holding structure, and resuming trend. Put it all together and execute it over time. Control your risk, and you'll be free. All right. If you want help with that, come work with me one-on-one in Bootcamp, guys. Crowd is one that is on the radar. We need to make sure that we're working with the momentum of the software ETF. But this is triggering. It's trying to trigger here on the weekly. I like it through this range here. That's enough lines. Let's clear a couple of them out. That's the only line that I care about now. We are trying to trigger on the weekly. I like it through this overhead resistance. Like, look at it. We've got some here. It's been an issue in the recent months. Through that yellow line with the market, all the other things that I keep saying, that is a weekly trigger for me, and a sector that I don't think is getting enough attention for the future. Cybersecurity. I don't think it's getting enough attention, how important that is. They just had another freaking Instagram leak. The government gets hacked like every other week, and Social Security numbers are stolen. Like, cybersecurity is a way bigger deal than anyone is talking about, in my opinion. So anyways, you can kind of see that on the charts, right? They are still trying to push to all-time highs and resuming trend higher in cybersecurity. So maybe people do care. A couple more here. EOSE. This is one that I want to be watching closely here as we retrace. Okay, we got our change in character and it's retracing. Let's see if we can react at around our level and retrigger. EOS is quite attractive actually here on this pullback. I just need to hold structure, right? Don't invalidate the whole move. React soon. React off the 50, retrigger. Back over the 9, that's going to be attractive to me. Oklo, same idea. All right, this gapped up or ran a little bit on some deal announcement, which I'm not even sure how that's possible because I'm pretty sure they don't have a product It's just like the idea that they'll be able to pull this off in 20 years. The last I checked, I haven't looked into them in a while, but I was just making myself somewhat familiar with them. Look what I see here. That same used stuff. Yeah, breakout, pullback. Look what I waited for. I didn't trade this breakout. I waited for the first triple R after, and I made over 100% on it, and then I did it again. God dang, I'm telling you guys, I got you. This works. Okay. Anyways, guys, we're getting a retracement. We got a change in character. Retracement pulls right back into structure. Has not made a new low. Reacting off of the 200 here, possibly back over the 91.50 area, over the 50 and stuff, could be a trigger with better risk, right? If you're trying to just grab this move as it's ripping and running away, like, you got to risk off a structure, or you just like picking a candle to risk off of, right? Like recent low, is structure, swing low. So like you're talking in this move, I don't know when you would have been convinced to buy it, but like your risk has to be like all the way down here. Like that's way too much. That's way too big. Now you need a move to go 2R to be all the way up here. Come on, that's just not the way. Wait for the first triple R after the major moves, the major catalysts, the breakouts, all the stuff. The first triple R after all the stuff is higher probability than all the stuff. That was kind of silly to say, but hey, fuck it, I said it. Nail, another one. I tried to get into this last week, exited flat. It's tiny profit. I think I'm somewhere in between 1% and 2% on it. Tiny profit, but we had a attempted change in character that I admit I sort of jumped the gun on that, but it was because I wanted to scale into a position. But anyways, when I saw that I thought maybe it was going to really start ripping. I had a feeling actually what I'm hearing myself say right now is I predicted instead of waiting for the first triple R, okay, which we might be getting here. So it tried to break out. It's trying to change character, get through this technical trend. If it can react off of the 50 and reinitiate through it is the better trade. And it's what I should have waited for the first time. But it's back on the radar. And last one, frog here. I've been talking about this all week. This is still on the radar. Let's get our answer out of the market, guys. That's enough. We're almost there, okay? I think we're going to get an answer out of the market. I think we're going to get some clarity and some follow through. And if we do, then we're going to turn the printers on. Stay safe, manage your risk. We're almost there. Let's go make some money. I'll see you soon.